Raymond James reporting record client assets and assets under management overall in the second quarter. Here to talk about the report and what's driving the increase is CEO of Raymond James, Paul Reilly. Paul, it's great to see you as always. You guys did grow assets to that record. The growth, however, in net new assets did slow to some extent. Can you talk to me about some of the dynamics that were at play in the quarter?
Yeah, so there's a lot happening in the quarter. If you look at the last 3 years in a row now, we've had record revenue and profits and assets. For the first 6 months, including this quarter, we have record revenue, profits, and assets. So we've had great growth. And this quarter is a little bit slower, seasonally a little bit slower. There's always in and outs, but the truth is where we stand right now, we're on a pace for record recruiting of advisors. We have record size of advisors. A few years ago, we didn't see $5 and $10 million kind of advisor teams. We're seeing $20, $30, and $40 million teams now talking about joining us. So it's a quarter and a long run series of very, very good quarters. We've always been really right at the top of net new assets. We're more in the pack this quarter. But longer term, middle term, I think we're in really, really good shape. So stock was adjusting probably to that net new asset number, and we're happy to be judged on what we produce in the next few quarters.
Well, Paul, let me ask you, given your position in the retail brokerage industry, what kind of trends are you seeing? We've seen an incredible shift in trader investor behavior over the pandemic. Since then, just what kind of trends are you seeing?
Jared, we've seen all sorts of trends in that period since the pandemic, and probably the biggest movement was when cash was free. People had a lot of cash uninvested. And today they're getting a good return on that cash, whether they're going to money markets, fixed income rates, or into deposit programs that pay high yield. So that's good news for investors. That's available. We've also seen, pretty good, for a while it was fixed income investments, but with the growth in the market, total position, the portfolios and equities is actually up. So it's been a good time, for investors that have been in the markets. They've done pretty well. And of course, there's always a fear of what happens next. But investors have looked at, probably bigger penetration into alts products. We're pretty conservative on what we allow on the alts platform, but certainly a pickup on that side, trying to hedge, potential downturns in the equity markets. But pretty well, they're staying invested with their advisors. And I remember just a year or two ago where a lot of investors, private clients wanted to get out of the market and stayed in, and it's paid off well for them to get really the benefit of this rally.
And so, Paul, even more recently, as we've seen some more cracks in the market, one could argue, or at least a short downturn in the market, how would you describe investor sentiment, particularly in that private client group, which is, higher net worth individuals?
And you can see the reaction, Jill. Even ours, we had one number that was off. The market's sensitive right now.
Yeah.
And you're seeing that really kind of in all stocks, even on hits on quarters, just a little bit of something going on, you see adjustments. So investors a little more skittish. We still have 70% confident in the economy. Down, I saw the latest survey, over half were constructive on the market. So that shows the split nature and personality. But the good news for us, we're steady at 95% of people think their advisors are doing a great job for us. So, but investors, I think, like institutional investors, as you see small movements or data points really have big reactions in the market, I think people are a little skittish because it's been a long up market since, really 2010, as we've, had a pretty long recovery here. And I think people have been nervous.
Paul, since we spoke last, the news was announced that you have named a successor, the CFO of the bank, Paul Shoukry, who's going to take over sometime next year. And I'm sure we're going to talk again before that happens. But in the meantime, I am curious sort of what you want. I mean, you've been CEO there since 2009. So I'm curious what you feel you want your legacy to be at Raymond James. What do you think is sort of the biggest imprint that you've made on the organization?
Well, I tell people I only take credit for two things, is our big increase in technology, which has paid off really in making, I think, the best platform for wealth advisors anywhere. And the second is I haven't messed up the culture yet. We've had 63 years of this tremendous culture really started by Bob James and institutionalized by Tom James. And through my whole stay, culture's been number one. It's a very family feel firm, even for a big firm. Everybody's a first name basis. Advisors aren't afraid to reach out directly to me or anyone else here. And that was also critical as we picked my successor. We had 4 great candidates, all very capable. And we went through a multi-year process. And the question wasn't if those people couldn't be CEOs, who was best for the firm at this time. And with the mounting regulatory pressures and capital pressures, regulation in general, we felt that Paul was best equipped. The good news is all 4 have worked together for 15 years. They were all in the process, and they've all committed to stay together for the next 15 years. So I look at the transition of Tom James appointing me, and I felt my mission was to take it from the founder to the next successor. And I'm very confident, not just in Paul, but the whole team that'll be with him to continue the trajectory. I'm sure he'll do some things different, but the culture is sacrosanct. I know he'll continue to have this great advisor-centric, client-centric firm that we've always been. And he's been a big part of things we've done, whether it's our success on the cash sweeps during, last March when there were runs on banks and we created deposits, through our capital programming. Even though analysts say we have too much capital, we still have really top ROEs in the market. And we have 3 A-level ratings in the rating agencies. And for a firm our size and that in our industry is unusual, unique, I would say. And Paul's been a part of that as the whole team. So to me, it's been a gradual passing over. And technically next year he'll be the CEO. And the good news is I'll be able to blame him when there's problems instead of him blaming me. So.
Well, I'll tell you what, quick note on culture here. Culture eats strategy for breakfast. So says Peter Drucker, famous quote there. I'm a believer as well. So thank you for joining us here today. Congratulations on your quarter. Raymond James CEO Paul Reilly.
Thank you, Jared and Julie.